Okay. Hi guys. Welcome to the first class of our online class for FAC3701. So I think our coordinator is also busy online, trying to give us some few rules, the do's and the don'ts. If I may suggest quickly that please make sure that your mics are turned off. Also make sure, in order to be able to hear me timelessly, make sure that your cameras are off. Yeah, so also in terms of trying to see the presence as well, just put your student number on the chat line, because I see some of the students have already done that, because we just want to see who's here and all those kind of things. Okay. So
sorry,
okay. Yes.
Put the student number where?
You need to put the student number on the live chat. Okay. And unfortunately, I will not be able to engage on one-on-one. So hence we are requesting that we need to switch off our mics, and then as well as we need to switch off our cameras. Okay. So there is a chat box on the left. Sorry, if you toggle between your screen, I think icon number 1, 2, 3, 4, 5 from the left, you should be able to see there's a chat icon in there. That is where you can see, that's where you can click and then put in your student number, or if I ask questions, then that's where you answer questions and not via the microphone. Okay. So if you can do that for me, because also what we're trying to avoid with the mic is the fact that there is perhaps noise on the background that you want to get rid of, not to affect everyone. Okay. So I think let's start then. So you will see on the drive itself, what I did over the weekend was to actually put some material for you in there, and I hope that you've actually read through that material. So the first item that was there was in terms of the reading that we had to do as far as the presentation of financial statement is concerned, right? So I hope you have read through that, but I'll still also go through with you that one just to highlight the important part or the important aspects as far as the presentation of financial statement is concerned. But what I'm saying is, it does not only end there. You need your study material or your study guide for this module or for that topic. It needs to guide you as to what it is that you need to study as far as that topic is concerned. Okay. Also, what we'll also do as well, we'll also go through an example of an income tax expense note, deferred tax note in a tax return. So the aim of the example is actually try to give you an idea of, I don't want to say the only important stuff, but some of the things that perhaps students might miss out or it's difficult to comprehend when you guys are doing a self-study, you know. So it will be from when you receive your question paper up until the end when you conclude that exam. Okay. Right. Okay. So the first one then is, what I'll do is I'll share my screen with you so that you are able to follow as to what it is that I'm dealing with. So if I may ask, you just type in yes in the chat room that did you guys have access to the material that I've loaded onto the drive? Just the yes in the chat room or no, so at least I know what it is that I'm dealing with. Desktop view, this one. Okay. Can you guys all see the screen that I'm sharing, right? Okay. And now, so to start with the presentation of financial statements. So So basically, the purpose of the presentation of financial statement is to ensure that we provide an objective financial statement to provide information that is objective and that is useful to the users of financial statement. Okay. Now, in order for us to be able to meet that objective, so the items of the financial statement will provide information based on assets, liabilities, income, and expenses. Sometimes it can be either gains or losses, you know. But coupled with that is the notes to the financial statement, because the notes actually assist the users to obtain a more detail as to what certain amounts or what certain amount disclosed that are made up of. Okay. Now, in terms of what the complete set of financial statement composed of, you will have a statement of financial position. Okay. And then you will also have a statement of profit or loss. It's no longer an income statement now. It's a statement of profit or loss and other comprehensive income. So within the module itself, we do not use the old terminology that says income statement and so forth. So for your balance, so for your old balance sheet is now called your statement of financial position. And then your income statement, which is the old term, the new term is now the statement of profit or loss and other comprehensive income. Your statement of changes in equity, and then as well as your statement of cash flows. And then obviously with that, you will have then your notes that and your accounting policies that then accompany that information. Okay, fine. Now, I think the reason why I'm highlighting this is because students are still making reference to the old way of how the statements have been named previously. So we need to get on with the times that we need to use the relevant names. We need to use the relevant or the required terminology as far as the module is concerned. All right. Okay. So the whole essence of this standard, what it's trying to achieve actually is the fact that it's trying to achieve a fair presentation and compliance with your IFRS. Now, there is also a guideline or a framework that is called a conceptual framework for financial reporting. So this is not actually a standard. It's just a framework or a guideline that actually assists all the standards that you have. And what I suggest is you also need to go through this framework, because it is actually from the date of issue of the revised one, it is not materially different, but there is new concept that has been introduced. So this is the framework where it actually tells you how do you then define an asset, how do you define a liability, how do you define an income, how do you define an expenditure. Okay, so I suggest that you actually go and have a look at the conceptual framework. Okay. But also another aspect or point that is important. Often you will see in your questions, sometimes they will say they want comparative figures. Sometimes they say that do not present comparative figures. What do they mean actually by that? So in paragraph 38 of IAS 1, it says an entity shall present as a minimum 2 sets of financial position, two statements of profit or loss and other comprehensive income, 2 separate statements of profit or loss, and then 2 statements of cash flows and 2 statements of changes in equity and related notes. So what do they mean if they ask you to present the information for the 2020 financial year, and then they ask you to present comparative information or comparative statements, then they're asking you that you need to do 2020 as well as 2019, because I know most people actually struggle with that concept as to what do they mean by comparative information. So they're asking you to, as a minimum, you need to do 2 statements, which is the current year that you're busy with, as well as the previous year that you were busy with. Okay. And then now to move on, we also have one of the crucial things as well that I've seen happening is the fact that when you guys are responding to the required if they ask you to prepare a statement of profit or loss and other comprehensive income, there is no indication in terms of who is the reporting entity. There is no indication as of what is the statement all about. There is no indication of in terms of what is this statement covering, what period, is it the 2020, is it 2019 or 2018? So in terms of paragraph 1.51 of the standard, you need to actually indicate as to what is the name of the reporting entity. So when we're doing the disclosure note for income tax and your rate recon and your deferred tax, in all those responses, you should be able to see what entity am I dealing with, right? What is the reporting period that I'm dealing with, you know? So these are just some of the points or some of the things that you need to actually make sure that you adequately address them in your response, because sometimes you might be in a situation that you've actually missed in numbering your responses, but then at least the person who's marking, they're able to see then, okay, this is the statement of profit or loss for this date or for so and so and so. Okay, and then in terms of paragraph 54, you can just read for yourself in terms of what does the statement of financial position includes, and then the next one as well. But I think what's very important here is the fact that the statement of financial position, shall include line items that are presented in the following amounts. And then if you go to paragraph N and paragraph O, it speaks exactly in terms of the IAS 12, okay, which now relates to income taxes. So which means that somewhere in your statement of financial position, if they ask you to prepare that statement, right, and you are dealing with income taxes, somewhere, somehow, okay, let me just mute some of the guys because I can hear that there is noises that is going on here. Hold on, quickly update you just now. Why can't I mute all now? I'm trying to mute on dismiss. Okay, I'm not sure why. So anyway, it's fine. So if you're dealing with income taxes, and then there is perhaps a question, which is I doubt, on preparation of the financial position, there needs to be a line item where you will need to disclose what your tax tax liabilities are, or your either your tax liabilities or assets, or your deferred tax liability or deferred tax asset, whichever one is, and in terms of your answer. But also what's important as well in terms of paragraph 56 is the fact that it says that when an entity presents current and non-current assets and current and non-current liabilities as a separate classification in your statement of financial position, you will not classify deferred tax assets or liability as a current asset or liability. So what they're basically saying is, because remember what we're saying, that deferred tax is a future tax, right? Now, what they're saying that because of deferred tax is a future tax, you cannot, in terms of the standard, then you cannot disclose your deferred tax assets or liabilities as a current assets or liabilities. So it should form part of an item that is long term, right? And not in terms of a current asset. Okay. Now we're done with the reading in terms of the first part. Now we're going to move now into the actual question itself. Okay. So I'll close this part. So this reading was loaded onto the drive for you guys to be able to read before the start of the session. And what I suggest is after this session, you need to go back and then just read through for you to understand as to what it is that's going on within the question itself. Okay. So in front of me, I have two screens. So if I'm not looking right to you, I'm looking on the other side because I also have another screen that I'm using on the other side. Okay. So just bear with me in that regard. Okay. And now we're going to go to the income tax part. Okay. Just want to share my screen with you, but I hopefully stop. Okay, desktop window. Okay, so on my screen here, I have an Excel sheet that is named to my income tax, okay, IS-12 income tax framework, fine. Now within this framework itself, I've tried just to do for you a smaller sort of skeleton in terms of how would your okay, there's the one that's missing here. Okay, yeah. So how would your income tax expense note look like with all of those components, right? And then how would your tax recon look like with all of those components? What I am not saying is the list that is not there, it's not exhaustive. There are other items, but in terms of when I was compiling this, those were the items that could come up. When I was busy compiling this. But what I need to highlight as well that I've covered with you just now, it's in fact of you need to be able to indicate what is the name of the entity. You need to be able to tell us as to what it is that you are dealing with. You are dealing with a tax rate record. And then you need to be able to tell us that you are dealing with the notes to the annual financial statement for 31st of December 2020. So to me, those aspects, when you're doing your required, they're very important. Also, in terms of, remember the distinction that I referred to about in terms of, are you dealing with comparative figures or not comparative figures? Because if it's comparative figures, then your current year will be 2020, but now if it's comparative figures, it's going to be 2020 as well as 2019. Okay, I see Varma is asking, please advise which drive is the material available on. The material is available on Teams, the same link that you've used to access this session. The material is available in that link. So the same way that you accessed the session, the material, everything is there. Please have a look. Please have a look in there quickly, because I've loaded everything on over the weekend. Okay, so this is how your tax rate is going to look like. And then obviously, I think what most students actually don't get to do, it's the note that refers to your deferred tax. Because remember what I read to you previously, I said that in your statement of financial position, you will have a disclosure amount of what your deferred tax asset is or what your deferred tax liability is, right? So this note then serves to indicate as such, okay? But I think what's also important is the fact that your referencing is very important, because you'll see in each and all my columns, or in each and all my notes, there is a column for a calc to a reference. And then the reason why we say that, for instance, I'm going to make an example. Let's say in the current tax column, you have an amount of 16,000, let's say 16,000, right? Fine. But now when someone is marking this, the amount of the 16,000 is not correct. Is not correct. The amount of 16,000 is not correct. It was supposed to be 17,000, right? Now, if you have a reference and say from calc, let's say calc F. Now, the person who is marking your script, this person will say, okay, there is an amount that is disclosed there, but then according to the suggested solution, this amount is not correct. So now they're gonna go to calc F, wherever calc F is. As an example, let's say calc F is here, or let's say it's here. Now they're going to look, okay, what is that amount made up of? Okay, and then they go there and mark and mark and mark. So if you do not reference your calculations, you will find yourself in a situation whereby they are unable to mark you, right? So please make sure that in whatever calculation that you do, you actually go back and reference in terms of where does that amount come from. You understand? Because remember, when we do, if you do in practice, you do a complete set of financial statement. If you disclose something in your balance sheet or you disclose something in your income statement, so I'm gonna use the old terminology, but in your case, you need to use the new one. So if you disclose the amount in your balance sheet and your income statement, now let's say it's assets, you will always make reference to say, please refer to note 3. Now we're gonna go to note 3, and then you see how did you actually derive that amount. So the same thing about you that is required is that you need to you need to reference all your calculations. So whatever that you disclose in your note, it needs to be coupled by a reference, unless if it's then an amount that you copy from the scenario and then into the question itself. Okay. Now we're going to move on now into the question. Okay. So I'm not going to close this. I'm going to leave this here for now. I'll just change screens quickly. Fine. Now, are you guys seeing this question 1 that I've put now on here? Just reply with a yes so that I can see, so that I can see that you guys can see this question on here. Just say yes. Anyone that, okay, great stuff, patience, okay, great stuff. Now, so I assume that you have went through this question up front, right? And because what I'm trying to take you through now is to say, how do I accumulate the maximum marks within the 3 hours that I'm given to write the exam? Okay, if it's 3 hours, I assume it's 3 hours. If it's, yeah. Now, so you receive your exam paper or you receive your question paper, whatever you call it, and then it has this kind of information, right? Now, there is 2 ways to do this, but I think at this point in time, you're going to do it my way, and then thereafter, you'll then make a decision as to which way is easier. So I'll give you both options, but they're more or less the same. Okay. So the first option that perhaps you do is the fact that within the 5 or 10 minutes that you receive the paper, you just read through like your normal newspaper. Read through, oh, okay, they're giving me this scenario, blah, 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 blah. You read through everything. Up until you get to this point, sorry. Okay, yeah. Up until you get to this point. So this point of the required is the very crucial point of what it is that you need to answer within your solution itself. So the required is say you need to prepare the following notes, right? And then they give you the financial year that is for the 29th of Feb, that's 2012. So you need to prepare your income tax expense note as well as your deferred tax note, okay? And then they say to you that please note that the movement in temporary differences in the current tax calc must be calculated using the statement of financial position approach or method. Do you know what that is? Okay. And then comparative figures are not required. I've discussed what it is. What do they mean about comparative figures? So if you are busy with 20 February 2012, they are only looking for that year. But if they're saying that they want comparatives, then you also need to do 28 Feb 2011. But in this case, they're saying no comparative figures. Ignore that, and then amounts must be rounded off to the nearest rand. Your answer must comply with the international financial reporting standards. Okay. So the request that I had for you was to say you need to read the scenario, you need to attempt the required parts stipulated, but also have your solutions in front of you. Okay. And then you can read the rest of the notes that I have there with you. Okay. So I think at this point everyone is still fine. Okay. Now, what we'll do is what we'll do is, so your first point of departure is to say, I know what it is that they're asking me, right? And now, since that I know what it is that they're asking me, there is nothing that stops me from going into my exam solutions writing pad or writing note, whatever you call it, and then I'll start drawing my skeleton. I know they're looking for the income tax expense note. Okay, let's forget about that here. I'm gonna do that. Forget about that one. Forget about 2011 now. They only ask for 2012. Okay. So I'll go and do my skeleton for my income tax expense note. I am gonna go and do my skeleton for my tax rate recon. They've also asked me to do the deferred tax note. So I am going to go and then do my skeleton for my deferred tax note. Right? Okay. So now I am done with that. Okay, fine. Now I go back to the question. Okay, so the question is saying, so now I go back to the question. Now, what I'm going to do is I've already drafted all my skeletons, right? Now I'm going to go to the question. So the question, so number one deals with property, plant, and equipment. Okay, so what I'll do now is I'm gonna put up my own question that I've actually put on notes and analysis as to what's what and what's not what. Okay. Okay, can you see that? Okay. Okay, now you'll see within the question itself, I've put on comments to say, okay, in terms of question number 1, this is going to feature in my deferred tax. Someone disturbing us here. I'm trying. Guys, can you hold on quickly? I'm trying to mute. Okay, that's fine. Okay, so I'm making myself notes because I'm now in a thought moment. Okay, before I attempt this exam. So now I'm saying here, okay, point number 1 is going to assist me in the calculation of deferred tax, right? Okay, that I know, and then so it says here the property and plant is measured according to the cost model IS 16, that is PPE. And then Montana provides for depreciation on the straight line basis. That's very important. Depreciation has already been taken into account on the property, plant, and equipment, right? And this has already been taken into account in your calculation of profit before tax. And now they give you the story of how the depreciation is calculated for factory and office building, and then as well as how is it calculated for plant. Bear in mind that it is apportioned for part of the year, all of them. Okay, right? So I'm making note there, okay, this is gonna help me in calculating the carrying amount. Okay, fine. Now the next one is, okay, so the next one is in terms of your SARS wear and tear allowances, okay? Now, so that information will also assist you when you're calculating your tax base for your deferred tax. Right, fine. Now here it says that SARS does not allow any allowances on the office buildings. Now, if I should ask you, when you're doing your deferred tax calculation, or when you're doing your deferred tax determination, will reading this statement, will this arise in a temporary differences or permanent differences? Just type in the chat box. Just say yes, permanent difference, or a temporary difference, or whatever it is. Okay, so this basically, this statement then means that as far as office building is concerned, there will not be any temporary differences that's being created, because there is no allowances that are being created. So that part will not result in any temporary differences, but now it's a permanent difference, right? There we go. That's the answer I was looking for. Okay, and then number 2. Okay. And then number two then deals with, so it says the following balances relating to insurance is included in other receivables. So what's happening is that those balances, they included as prepaid insurance premiums, okay? And then they say that these expenses, these prepaid expenses were tax deductible in the years in which the expenses were incurred, right? So it means, so now for accounting purposes we have a prepaid expense, but now for tax purposes there is no such thing as a prepaid expense, right? Now it means that there is a difference between how accounting versus tax treat this specific item, right? Now this then means that if you now need to do, if you now have to do your deferred tax calculation, will this result in a temporary difference, yes or no? Yes, it will result in a temporary differences, because what would have happened is that for tax purposes, those amounts you would have deducted them in the specific financial years or in the specific years of assessment that it relates to, irrespective of whether it's prepaid expenses or not. Because Section 23H of the Income Tax Act, it says that if you have a prepaid expenditure that you have, and that expenditure or let's say the enjoyment or the benefit thereof, it extends beyond the year of assessment, meaning that the benefit or the consumption or the use of that expense will be now after the 2012 financial year. Now you can deduct that expenditure provided that expenditure will be utilized within 6 months after the end of 2012, or if it will not be utilized within 6 months after 2012, then it needs to be less than 100,000. I think that is still the provision. So if it's less than 100,000, so those are the only two provisions that you need to actually understand, that after year end, you will use it within 6 months, or if it's not 6 months, then you will need to check whether the total of these prepaid expenditures, they are less than 100,000. Okay, but here in this information, you are not being given an indication as to whether are you going to be able to use these premiums or these premiums raised to 6 months, 7 months, 8 months, and so forth. Right. So I think in this question, let's assume that it's less than 100,000, then we can deduct everything in the year that it relates to. Okay. Now, in point number 3, if you go to point number 3, it gives you your profit before tax that's already been determined for you. There is no need for you to go and determine as to what is the profit before tax, unless if there was additional information that has been given to say these were not yet taken into account into your profit before tax. Now, once they ask you to do a revised profit before tax, then all the additional information, you need to take it into account. But in this case, they are telling you that the profit before tax already includes the following. Remember above in step 1, it says depreciation was also already included in them. So when you're reading all these steps, you need to read all of them with comparison to say point 3 links, there is a link in point 3 that ties up to point 1 as far as depreciation is concerned. Fine. Now, you've already drawn your skeleton for your income tax expense note. You've already drawn your skeleton for your tax recon, and you've already drawn your skeleton for the defects tax note. Fine. So now we're just analyzing the question. We will get to answer the actual question. Now it says here your profit before tax for that year was 1.5 million, and then included in this is your dividends. What am I doing now? It's your dividends. Fine. Now your dividends, we know that in terms of income tax, dividends are exempt. So it means that now you need to reverse them. So you take out of when you're doing your current tax expense, you then take them out of your your profit before tax. And then what's going to happen to your fines to fine for contravention? Do we deduct or do we add back? We need to add back. Simnikiwe, you're right. We need to add back. Because remember, Section 23 of the income tax provides for prohibition of certain expenses, especially if it's fine or penalties. So what SARS is saying is that, so what SARS in their mind they're saying is that I am not going to promote non-compliance. I am not going to promote bad behavior. So anything that is fine related, anything that is penalty for non-compliance to something, traffic fines, you do not pay your fines on time, you do not submit your returns on time, you cannot deduct that amount because it's not an expense that is incurred in the production of income. Okay, and then valuation of inventory destroyed in a hailstorm. So the nice thing about this question is the fact that they're already telling you that it's not tax deductible. But the next question might not tell you this. So you need to ask yourself, fines, what do I do? It's not tax deductible. Now I need to, if it's already included in the profit before tax, now for current tax expense purposes, it needs to be reversed, right? The same thing as donations. Donations paid are non-tax deductible. Okay, now if you then have donations that relate to Section 18A, you will still not be able to deduct the full amount, but now you will be able to deduct only 10% of your taxable income that then relates to donations tax. Donations paid. Fine. And then also, now revenue earned in the United States. Okay. Now revenue earned. Remember, you are SA residents, and you are now taxed now in terms of your worldwide income that you receive all over the world. Okay, fine. Now, what needs to happen is this: okay, let's say now you were in an exam condition, right? So if you have to deal, or you have to disclose, or if you have to factor this amount, in which statement would you then factor? Not statement, in which from the skeleton that you've done, would you consider this under your income tax note? Yes or no? Would you consider this in your tax rate record? Yes or no? Okay. So both answers to this is yes. You would consider in your tax reconciliation, yes, as well as in terms of your income tax, because you would have to disclose in your income tax return in South Africa as to say, what is the tax that I've paid in respect of XYZ limited entity, whether it's in South Africa or whether it's abroad. Okay, so you need to reflect that. Okay, right. Now, number 4 says the final assessment issued by SARS for the previous year, which is 2011, reflected that there was an assessed tax loss of 170,000. And then as Montana, we've accepted this as correct. And then the board of directors were of the opinion that there would be adequate taxable profit in future to actually utilize this tax loss. Okay. And then we've actually then tried to do budgets to re-estimate in terms of how much profit are we going to perhaps generate in future. Okay. Now, where does this part of your information impacts? Is it in your deferred tax calculation? Is it in your tax rate recon? Is it in your income tax note? Where would you disclose this? We're going to answer that question. We're going to answer the question when we get to the doing the such assess solution. Okay, fine. Number 5 says the Minister of Finance has announced in his budget speech in the 2012, okay, that the normal tax rate applicable to companies shall decrease or will decrease from 28% to 27% for all financial years starting on or after the 1st of March 2012. So this rate now, this reduced rate will now be applicable for the next 10 years. Okay. So if they are giving you this information, if I am sitting at 29 February 2012, and they are asking me now to reflect my deferred tax, at what rate will I have to reflect my deferred tax disclosure? You only have a choice. You only have a choice of it's either 2 or it's 1. So which rate, if I'm being asked to disclose my deferred tax, what is the rate that I'm going to use to disclose my deferred tax? Because remember we said deferred tax is a future tax. So it's either a future tax that you're going to pay, or it's a future tax or future amount that you can deduct. So what is the rate that you're going to use to reflect as to what is the future tax that you're going to show whether it's deductible or whether it's taxable? Simnike, what is the latest rate? Yolandi is 27%. That's correct. Okay, great stuff. Okay. So Sim, when they ask you something, you need to be specific as to it's 5, 6, and not to say the latest number. So you need to start practicing yourself in terms of that if they ask you a specific question, you address that question specifically. And then number 6 is saying there are no temporary differences other than those that are apparent from the question. So that statement in there is not included there by mistake. So if you have done a question previously where there were more items than you have in this question here, it does not say go and look for items that do not exist. If they're saying to you that there are no temporary differences other than those that have been given in the question, do not go and look for other stuff because you've dealt with them in the previous question. For instance, for instance, you might find out that there might not be plant and equipment in there in your next question. So if it's not there, don't go and look for it because it's not there. It's not there. You know. So that's about. So now we're going to start writing now because we've done our planning, we've done our skeleton, we've analyzed our question, we sort of done our proper planning now. So what's important with this kind of question is the fact that if you spend more time on planning, you will see that when it comes to the writing part, you actually spend less time because you know exactly where what fits where now. You've done your skeletons, you know exactly what fits where now, you know. So and the idea is once you deal with one part, once you deal with part number 1, you make sure that you never come back to that point. Once you deal with part number 2, you make sure that you never come back in there. Okay. So what I'll do is I've already given you a suggested solution in this regard, but I think it's also worthwhile, but just to show you in terms of if I was dealing with, let's say, number 1 or number 2 or number 3, how would I have dealt with that? Okay, but I think for the purpose of this session is that we'll just go straight into number 3, and then I'm going to show you how I would have then dealt with number 3, and then we're going to see so we'll do 3, 2, and then we're gonna do the rest thereafter. Okay. Fine. Now this is my suggested solution. Okay. So this is my suggested solution. So with me, the first point of departure, what I would have done is I would have said, okay, my income tax expense note has the current tax portion into it. Okay. Now I'll start with the current tax. Okay. Now, how do I determine the current tax? Okay. Fine. Now you will see exactly that if you go to number 3 deals more with your current tax. Okay, because what you need to do is if you go in here, let me open this. So if you go in here, you'll go to your current tax calculation. Okay, control that. So if you see here, there you try here now to determine what your current tax expense is, right? Okay, so now there is your profit before tax of 1,500. Now what we're saying is we're doing now the tax calculation. So we say now all those items that are treated differently between accounting and tax, now we need to adjust them or we need to revise them. So we said that dividend tax are not taxed, so we need to take them out. Okay, I will, and then remember what happens to foreign income is foreign income or what is the reason why we are reversing foreign income here? It's because the rate of tax that the foreign income is paid on is different compared to what our South African rate is. And that amount is not taxable in South Africa. It's taxable in the UK or the United States, whatever the question is saying, right? And then also in terms of the expenses within the question itself that for accounting purposes were deducted, but now we know for tax purposes they are not deducted. Okay, we said fines, they're not deducted. We said donations, they are not deducted. But now I have included here an extra line item that relates to what? To depreciation for office building. Why did I include depreciation for office building as a non-deductible item? Why? There is your answer. Exactly, that's the answer. Okay, so you are, because SARS does not allow any allowances on office building. Therefore, then it means this then relates or then results into a permanent, I would say, permanent difference. Okay, now, so now that's all well and fine, but now what you do is, because remember, you've already dealt with this information. Now, having dealt with the same point again, remember, you are still on point number 2. Where can you use this information that is given in point number 3? What is the other statement, or what is the other note or that you can use this information on? On your tax rate recon. You see, so while you're dealing with your current tax expense, you might as well deal with your tax rate reconciliation, because you've already said that we need to deduct your dividend income because it's not taxable. We need to add back the fines, we need to add back the donations, we need to add back the depreciation in office building. Are we together? Right. But also there was also an additional item in there that you can also somewhat deal with it. You can deal with it instantly, which was your foreign income. Okay. So there was your foreign income. So foreign income, we said it was taxed at 33%, right? So tax on 33% gives you how much? I think it gives you 55 or 59,000. Fine. But now what we are saying here in our tax recon, it's all well and good that we paid tax at 33% abroad. But now, at what rate is the tax payable in South Africa for 2012 financial year? It's going to be at 28%. Right. Now, what needs to happen is that we then need to bridge. So we then need to account then, so that additional 5% difference between what our current tax rate is and your foreign rate is, we need to include that as a reconciling item, because what you paid abroad versus what's payable in South Africa is different. So now that will result in a reconciling item. Okay. And then I think for point number 2, I think that's where you stop, because now you see, do you see now at point number 3, you've addressed now basically 2 aspects. You've addressed your tax rate recon. So here you've already accumulated marks just by copying and pasting stuff. You haven't done calculations as yet. You're just copying and pasting stuff and amounts in here. But then remember, this amount in your tax recon needs to be 28%. Okay, so in here, you've already earned yourself, let's say, accumulated marks just by copying and pasting amounts. Okay, fine. Now, okay, so according to me, we are done with number 3. Okay, now you move on. You're done with number 3, now you move on. So you have a choice of whether dealing with number 1 first or number 2, but I'm not gonna do number 2 now. Number 1 now, I'm gonna leave it for last because it's long. Okay, So number two has an impact of your deferred tax calculation. Okay. Now let me first go back to this one and tell you the reason why you actually can't complete your calculation of your income tax expense. Because remember, you've done all of this in accordance with point number 3. But now you can't move on because you haven't done what? Your movement in temporary differences. So your movement in temporary differences is then influenced by all those stuff where there's a different treatment between what accounting is saying and what tax is saying. So you can't move on with this calculation, okay? Because you need this specific line item. Now, if you go to that specific line item, so your next calculation now is going to be your deferred tax in order for you to be able to do your movement in temporary differences. Okay, so what I said is that we're going to leave point number 1 for now. We're going to do it later. But now what I want us to dwell into, we're going to go into point number 2 that deals with your prepaid insurances. Now, the question is telling you that prepaid insurances for 2012 was 35K, and then for 2011 was 25K. Fine. Now, what is the carrying amount in the 2011 financial year for the prepaid insurance? Give me the amount. Okay, and then what is the amount? What is the carrying amount for the insurance in 2012? It's 30. 30, is it 35 or 30? I think it's 35. Fine. Now, what is the tax base of those amounts for both 2011 as well as 2012? So your answer there should be no, because remember what we said is that those amounts would have been deductible in the respective financial years for tax purposes, but now for accounting purposes, those amounts relates to other financial years. So the balances that we have for accounting purposes for 2011 is 25,000, and then for 2012 it's going to be 35,000 rand. Okay. Now you will see that then that result in a temporary difference of 35,000 and temporary difference of 25,000, and then thereafter you calculate what your deferred tax is. Fine. Now, if I may ask, will this deferred tax result in a deferred tax asset or a deferred tax liability? The same as the 9,800 rand, will that result in a deferred tax liability or a deferred tax asset? Because it's very important that you actually highlight as to am I dealing with an asset or am I dealing with a liability? Because if you don't indicate, then we don't know what it is that you're dealing with. So it is important that you actually need to indicate as to what it is that I am dealing with. Okay. Okay. Now, so in my understanding, we are also done with number 2. We will never go back to number 2. We will never go back to number 3, because as far as possible where they need to go, we've already addressed them. Okay. Now I will go to number 4 quickly. Number 4 deals with your tax loss or your assessed tax loss. So it means that after you have submitted your I'm gonna come. Okay. Let me just go back quickly. Okay. Let me just go back quickly to the prepaid insurance here, the 35,000, because someone is asking here, why is the 35,000 not taxed in 2011? Okay. So remember, the 35,000 cannot be taxed in 2011. I'm not sure if you're asking about the 25,000 or you're asking about the 35,000. Okay. So the 25,000 would have been taxable, or it must be taxable in 2011. So hence here, we do not have a tax base because according to SARS, they will tax that 25,000 in 2011, right? But now for accounting purposes, we are saying that this 25,000 does not relate to the year of 2011 because it's prepaid in advance. So which means that we might only be able to enjoy the benefits of this only in the coming year because it's not for the current year. The same as this one is to say that we are paying for an expense, but perhaps we'll only create that expense, or we'll only get to enjoy the expense only in 2013 or whatever year it is, but not in the current year. But SARS is saying no, for as long as that expense is less than 100,000, or as long as that expense will be consumed within 6 months in the 2013 year of assessment, then it's still fine for me. You can deduct. Understand? So that amount was then deductible in that year. Okay. So if now I move on into the tax loss part. Okay. So there is a tax loss, but now what I want to know from you is what is the carrying amount of the tax loss? Okay, great, Suniki. What is your tax base for this as for your unused tax loss? Great, Suniki. And then it will give you a temporary difference of 170,000. Why do we not have a carrying amount for an unused tax loss? Okay, so for accounting purposes, there is nothing as an unused tax loss. It's either we have a loss or we have a profit. There is no unused tax loss. So the tax loss issue is a tax concept. So your carrying amount will always be nil. Okay. Now, and then you will have a deferred tax amount of 46,700. Right? Is that a liability or is that an asset? It's an asset because you will be able to deduct or you will be able to set off against temporary differences that may arise either in the current year or in future. You'll be able to set off. Okay, fine. So I've given you the solution of this thing. Now I'll just show you the other narrative part of how would a complete deferred tax calculation would have looked like. Okay, so if you would have done a complete deferred tax calc, so it would have looked like this. Okay. Now the question that I need to ask you, I have a line item that says the land and land. Okay. Now on top of there, I have an item, so I don't have a tax. I don't have a tax base for land, and then as such, I'm saying that now there is no deferred tax. Okay. Do we perhaps know why the reason then we say that there is no tax base for land? It will be the same reason that you're going to give me, right? Because of there is no allowance that's granted, so then it only makes sense that you can't then create a deferred tax in that regard, because how this will be taxed, land will only be taxed once you then sell that land. There's a different discussion on that, but I'm not going to get into it. But at this point in time, what you need to know, and for the purpose of this module, is the fact that from zero to cost on land, there is no deferred tax that is created in that regard. Okay. So and then as such, there won't be any deferred tax indication on that. Okay. So those will be that will be your indicator in terms of whether it's an asset or liability. That will then also be your indicator as well as your asset and liability. Fine. But now there is something that I think we're forgetting in here. And what is that? What is that? What is it that you're forgetting in here? That's the part that you're forgetting. Because remember, we had a rate change in here. Now, your rate change then will result in a reduced tax liabilities or a whatever you call it, but then it will reduce your tax exposure. Okay, fine. Now, I don't mind whichever way that you're doing it, but now remember, this tax rate change came in, that was after the conclusion of the 2012 financial year. So it means for now, when we're doing our disclosure, we will show everything at 28%. But now what we need to do, once we have those balances, we need then to adjust them and reflect them at 27%. Okay? So how much was the change in rate change that you're going to push through? Give me the figure. It is in the solution. Give me the figure. It should be 13,000. Should be 13,725. So does that 13,725 decreases your deferred tax, or does it increases your deferred tax? It decreases the deferred tax, because remember, it's a rate reduction. So it was from 28 and then now it is at 27%. So there will be a reduction in your deferred tax liability. Fine. Now that you have this rate change, where is this going to be disclosed? In the notes that in the skeletons that you have done, where is that going to be disclosed? Is that going to be disclosed in your tax record, your income tax note, or where is it going to be? Yes, Simniki, is going to be in your tax rate recon, I think somewhere here. But also, where is that going to go as well? Should go into your income tax expense note, because you need to show that the tax currently, so the deferred tax currently has reduced or is reduced by that specific amount. Okay, so I need to answer someone quickly here who's asking, so temporary differences, please, how do we know it's in bracket or not in brackets? I get confused there. He's saying when I need to do the different movement. Okay, I'm gonna deal with the movement now. Okay, so how do you know whether something is in bracket or not in brackets? Okay, so the principle is, if you say I have a liability and then you have an asset, fine. If you are saying that all of my liabilities, I'm gonna treat them as in brackets, you make that decision. And then assets, I'm gonna treat them without bracket, right? You make that decision. But also, if you decide that if it's an asset, I'm gonna treat it with brackets, and then liabilities without brackets, it's a decision that you're going to take. But what you need to make sure, you need to tell that as that a liability is without brackets, and then an asset is with brackets. And then now you need to apply that principle or that methodology throughout your solution. You can't chop and change. You can't chop and change. And what I would advise you to do is rather use your liability without brackets, and then use your assets with brackets, because at most times you have more liabilities than your assets. So use your liability without brackets, and then use your asset with brackets. It's totally up to you, but as long as you're going to tell the marker as to, I am using the liability without brackets, but I am using the asset with brackets. So it needs to be a constant decision. It needs to be a constant principle or methodology that you're going to adopt, right? Okay, fine. So I'm glad that I've answered your solution, your question. So we've dealt with this, that we said, as much as we're including this in our calc, we're going to take it into our tax rate recon, but also we're going to take it into our income tax note to show what will be the reduction in our income taxes, right? So the crucial part that most of the guys struggle with is the movement in deferred tax. That's the part I think that most of you are struggling with. Okay. Now, to make things easy, because your unused tax loss is preferable, the standard is preferable in terms of a standard that is always disclosed separately. Therefore, when you're doing the movement, you should always do your normal temporary differences separately, and then your unused tax loss also separately. Fine. Now, your movement in normal temporary differences is going to be your factory building, is going to be your plant, and then it's going to be your prepaid insurances. Okay. So the easy way to illustrate this example, your movement will be just in general without breaking them down now, all of them. In general, it will be my movement is I am sitting at 137,500. Where did I start at the beginning of the financial year? I started at 106,500, right? So overall, there was a movement of 305,000. So did my deferred tax liability increase or decrease? It has increased, okay, by 305,000. So that is the principle that you need to apply. So now, if you need to break this down in terms of your unused tax loss, you're going to do the same thing. You're going to say for your unused tax loss to say in the current year. So in the current year, you perhaps have a zero. You perhaps have a zero tax. Okay. So what you do is that you will say, I'm currently sitting at. Let's do this. Let's say that. Okay, so probably you are sitting at zero because there's nothing in the current year, we assume. Okay, so you say I'm sitting at zero, but I started. Okay, I've already put in the zero there. I'm sitting currently at zero, but I started at 170. Okay, so zero minus negative 170. How much does it give you? It gives you a positive 170. That's very important. It gives you, so a negative minus a negative gives you a positive. So this gives you a positive 170. Okay, and then you'll do the same concept now for your normal temporary differences. You will say that I was sitting at 137,500, but now where did I start from? I started from 312 plus 900 plus 205. Then you should be sitting at, you're going to be sitting at 135. Okay, so let's do this. You're going to say is equal to, so I'm adding all of these give me 132,500. And I'm going to say my movement will be minus that, minus that, minus that. So I'm sitting at 135. That's my movement. And then for my rate change, okay, or let's leave that part for last. So what's the so now what's going to be your deferred tax on this? So your deferred tax on this is going to be that multiplied by 28%. Then you have an answer for both of them. Okay, your movement for rate change in tax remains the same, does not change, because this is already tax. This is already at 28%. Okay. Okay, fine. Now, if you go back, okay, so I know this is quite a lot, because remember I said you were now stuck in there, but now you do have now your answer in terms of what is your movement. Your movement for the normal temporary difference is how much? It's 135. And then your movement for your unused tax loss is how much? It's 170. It's not the tax, it's the movement, right? But now where else can you use these figures? You can use those figures in your income tax note. Yes, so you can use those figures in your income tax note. So there is a 37,500. Where does it come from? It comes from there, right? There is a 47,600. Where does it go? It goes to here. So as soon as you're done with an amount, go transfer it where it belongs to, because once we're done with the movement, where did you go? We went here and said, okay, there's the 135 and then there's the 170, right? And then we said, okay, we also have the deferred tax. Where can we transfer those amounts? We can transfer those amounts into our income tax expense, because by putting this amount, you've already accumulated marks for me, right? Okay. Now let's go back to our. So are we done with our deferred tax calc? Yes, I think so. Now, where do we go back now? We go back now into our current tax expense. And then now you have all the figures. You now have all the figures and then your taxable income. Now, your taxable income at 28% gives you 249,200. Fine. Now, you go back to, so where do I take that? I will have to disclose that into my income tax expense note. Okay. Now, do you see that you've addressed all of these while you were busy doing your calculation? You did not wait up until the end when you're done with your calcs, then only then you transfer. The moment you're done with the first calc, go and transfer it to where it belongs. The moment you're done with your calc, with your, for instance here, the moment you're done with the calc, go and transfer it where it belongs. And then the moment you're done with that, you go and transfer it where it belongs. Right? So now, majority, you've done all of this. Remember, the only item that will be remaining that you haven't done, it will only be this part. But what I want us to do now, we'll just go through the whole, we're just going through all the tabs to see what it is that we haven't addressed. So we haven't addressed that one, only in here. And then here, we've addressed all of these. We've addressed all of this, right? Yes, we did. Okay. So you have already accumulated marks here. You know, so it's important that when you do a calc, you know where the specific amount belongs to. Do the calc, go and disclose. Do the calc, go and disclose. Do the calculation, then go and disclose. Fine. This is the one that you perhaps might have to deal with as well. Fine. So this one is pretty simple. If you go into a deferred tax calculation, right, you are busy with the 2012 financial year. If you need to have to look in terms of your property, plant, and equipment, right, which is, or let's say it's everything else except your annual tax loss, what would be the deferred tax amount that is allocated to those items? It will be 37. Okay, so it will be 374,500, né? Or you can either do them this way, that you do them that way and then minus your either, and then you have an answer of 360, 500, whatever the answer is. The same as your prepaid insurance, because remember, you are showing these now, this is the future tax, and then you're showing them at 27%. Okay. So you can either take the those temporary differences there, and then you multiply by 27%. Either way, however you do it, it's up to you. Or if you take those, and then you less that, whichever way that you do it, it should still work. It should still work out the same, but at 27%. Okay. So then you should be done with everything that that it is within the solution. So the only item that you would not have dealt with is the disclosure of this, but this one is pretty simple, straightforward. What you will do is you will just show as to how much of the tax have you paid in South Africa. So how much of the tax have you paid outside that relates to foreign income, and then that you just disclose that. Fine. Now let's go back to the question quickly and assume that we've dealt also with number one. Fine. Now, did you see the calculations that we did? We only went to number two once. We never came back again. We went to number three once. We never came back again, because we've addressed, because we had our skeletons, and then we've addressed everything adequately. Understand? And then we also had We only went to number 4 once. We knew where number 4 belongs in all our skeleton. We never came back here. Now we're only coming back here to check what it is that we have been addressed. The same as number 5. We went to number 5, and then in number 5, we've addressed it adequately. We never came back to it. That is the whole point. Once you read, once you plan, and then you plan thoroughly, and then once you read, and then you read comprehensively, and address each point one by one, you shouldn't ever come back to something that you've already read. The only time that you come back, I am only coming back to actually see, have I addressed everything? I have addressed all of them in my deferred tax calculation. So you're only coming here to see, did I cover everything? Now you're only doing this now when you're flexing your muscle, when you're flexing here, because you know I've already got a 90%, or you know. So let me go and collect now another 5% here. So yeah, now you're just going back and then you look as to, okay, have I addressed everything in here? Okay, I've addressed everything. Have I addressed everything adequately in point number 2, in point number 3, and point number 5? But then this technique, it requires practice. You are not going to be able to get it right on the day of the exams. You need to practice it right through. If it's a technique that works for you, you need to use it. If the technique does not work for you, then you need to find something that works for you. Okay. And my suggestion would be, you take the same question after, let's say, tonight, tomorrow, or over the weekend. You then try and attempt it in the same way that you read as if the first step is to read as if you're reading a newspaper, and then thereafter what you should be focusing on after you're reading the newspaper is to the required part, because the required is then going to influence you as to what skeleton you're going to compose as part of your solution, and also when you're reading now with comprehension, what are the things that you're going to focus on. So once you're done with your newspaper reading sort of example, now you go and plot all your skeletons. Once you're done with your skeletons, now you come back to the scenario again. Then you are reading comprehension. I'm reading point number 1. Where am I gonna go and plot number 1? You plot in all the relevant places, deferred tax there and there and there. You move on to plot number 2. You move on to point number 2. Where am I going to plot point number 2? Point number 2 is affecting my deferred tax. Okay, let me go and plot in my deferred tax. Now, number 3, where am I going to plot number 3? Plot number 3. Point number 3 is going to affect my current. It's going to affect my current tax expense. It's also going to affect my tax recon. Okay, I know the revenue part is going to affect my income tax expense as well, and then it's also going to affect my tax recon. You know, so now you're doing that planning in your mind, and now you're going to plot those items in their respective area, because once you do that here, you will never come back to this point again. You'll only come back here when you just, I'm rechecking, have I done everything? I'm rechecking, have I done everything? You know, the same thing if you're dealing with point number 4. Okay, point number 4 is dealing with an assessed tax loss. Okay, where is that going to be the issue? Okay, that's going to be an issue when I'm doing my calculation of deferred tax. And then now that movement of the deferred tax, I need to disclose it in my income tax calculation as a deferred tax movement. Okay, and then your rate change is going to affect my deferred tax calculation, but I must also go in and disclose it where? In my tax recon, and then as well as in the current tax expense note, whether it's an increase in tax or it's a reduction in tax. So and the idea with this, you should be able, so you spend more time in planning and then spend less time in writing. Then you will see in the end, you will still have some time left for you to actually go and recheck a solution, go and then recheck whether did I reference correctly, and all those kind of things. So the nice thing about what I did is, because I was working in Excel, so it was easy for me to actually reference as to where does that amount come from, or if I'm dealing with a tax recon, not with a tax recon, it's easy for me to actually go reference as to where is that amount coming from, right? But now I am not sure how are you guys going to write, whether you're going to write online or you're going to write by hand and then submit. I don't know how it's going to be. But I would say you need to give yourself a chance to practice via both mediums, writing by hand, one exercise, and then the next exercise you're writing by PC, and then so on and forth, so on and so on. Because I'm not sure what is the what's going to be the ruling on this one. Okay, so I hope with the example I've tried to actually cover all the basics that you perhaps need to know. And remember, this topic is principles based. So if you have the principles right, anyone can give you any question at any time. You will be able to deal with it as long as you have your principles intact. Because if I give you a complex question, it does not change the principle. The principle will remain the same. Okay, I think with that being said, I am going to allow questions, and then those who want to leave, they can leave the chat, and then those who want to ask questions, they can still ask the question. But what's going to happen is that they will, the recording will be available later on for download. So if you still want to go back to the recording afterwards, you don't require data actually as long as you access it through the MyUnisa website. You only need, like, I think one megabyte of data just to get onto the site, and then thereafter whatever that you use on when you are on MyUnisa, then you don't require it. It won't take any of the data that you have with either on your mobile or on your PC. So if you guys have any questions that you would like to ask, you can ask them. Yeah, I think also perhaps one more thing. I've also had here a sort of a skeleton for journals, because sometimes they might ask you to do a bit of journals there and there, right? So what's important for me is, in this skeleton, you need to be able to say to actually indicate as to what year you're dealing with, as well as in terms of what entity that you're dealing with. Okay, but I think also in terms of the date, it's very important as to what is the date that you are dealing with. What are the accounts that you are dealing with? Now, if you have, let's say it's bank, and let's say a data. What am I saying now? Let's say bank and a data. Let's say now, let's assume that the data has now paid us for the stock that they taken from us. So if I have a bank, I need to say that, okay, I'm debiting bank here with 2 rand, and I'm also crediting my data with 2 rand. Now I need to indicate where am I debiting bank, in which statement, in my SFP, but I also need to indicate as to where am I crediting my data, in my SFP, because if you do not do this, I do not recognize this as a journal entry, because where must bank go? Where must the bank transaction be debited? You understand? Because out of the journals, that is where we then so from the journals, that is where your financial statements are compiled, or your trial balance is compiled. But now, if you're not telling us, or if you're not telling the financial compiler as to where is it going, how should they know? Or should they now go back and then do? Should they now go back and then now do what you were supposed to do? So it's very important that you need to indicate that I am debiting a statement of financial position. I am debiting a statement of profit or loss and other components, or let's say profit or loss in this income, or I am crediting or I am debiting other comprehensive income. That's very important. Okay, Yolandi, what I'll do is I will try and put in this revised document onto the same link that I've put the rest of the document. Okay. So basically here, so whenever you're in an exam, these are clip notes to actually, because this is basic to say, where does my assets increase? Where does my expenses increase? Because the moment when you get into the issue of a deferred tax, you will then not have a clue, because you are deep in mode, you are stressed, you haven't slept last night, and it's exam day. So this will give you a crib note to say, let me just refer to my notes. where does your assets increase and then where does your assets decrease? Same as expenses, same as your liabilities, same as your income. So when I was a student, no matter how well I thought I knew my work, but these were one of the things that I will never go without when I'm writing an accounting module. I've done it when I was in undergrad. I've done it through CTA. I've done it when I was also doing my ITC and I was doing my APC. So this will come in handy when you're writing any accounting module, because sometimes you get into the mode and forget about the most basic principle. So when you get to the exam, just write down yourself a note into your solution paper, your assets, liabilities, and what do they call this accounting equation, whatever they call it. Okay. So if anyone has a question before we leave at 15:30, then I am going to allow those questions. And I hope with the session that we had, it has actually brought some light to you guys. So what we're going to do is next week, we'll also be sitting together at the same time. And we'll also try and do a question that is more advanced. More advanced, I mean that is addressing more principles than what has been addressed in here. So what we perhaps going to do in that session is to then try and focus on those principles that were not covered in this example. Right? So we're gonna try and do a build on. So we're doing steps, step 1, step 2, step 3, step 4, and so forth, so that until you are adequately equipped. So once you get this topic right, you will never struggle with it again. Even when you go to 3702, 3703, because deferred tax affect any accounting entry. And it's important that you get it right now. And I think this is the platform for you or for me to actually assist you in getting that right. But also from your side, what is required? You need to do pre-reading. You need to attempt the solutions, because it's much easier when you have your attempted solutions in front of you, and whatever that I work with, then you mark yourself. You see where you went wrong. You pat yourself on the shoulder, and then you see where you you see where you went right. Pat yourself on the shoulder, and then you see where you went wrong. Then we correct that. So I think So I think that's about it. If you have questions, ask those questions. But also, I think there is a self-evaluation questionnaire that is available on where you need to join the meeting. So I think it's titled your feedback. It's titled feedback form. If you can complete that for us for this session, I would really appreciate that, because that will also help me to improve in terms of what it is that you guys would like me to improve on, or even what perhaps the college need to, or the facilities team need to improve on. I think with that being said, I'll wait up until, let's say 15:35, 34, and then if there are no questions, then I'll switch off. Okay, or even now, if there are no questions and everyone leaves, then I will be off. Okay. Do you have any? Okay. The question here. Do you have a question for us to attempt? Yes. So what I'll do is, let's say perhaps later in the week, I'm going to upload that question that you guys need to attempt for our next session. Okay. So you need to attempt that question under the exam condition, right? So if it's a question that is an hour, you need to utilize an hour. So once the hour has elapsed and then you are not finished, now what you do is that you take a red, green, pink, maroon, whatever pen, then you complete the rest of the section up until you complete, because what you're trying to do is you're trying to see where do you need to improve. Is timing your issue? Or is are you slow in writing, or perhaps do you take longer to perhaps analyze the question? Okay, so I am going to load it up on Teams, and then it should be available. Let's say, so have a look by Thursday or by Friday evening. It should be there, because I need to adapt it a bit with more meaty stuff that it can be a bit challenging to see. Okay, so what we're going to do as well is I'll try and then see to what extent perhaps can we approach an exam sort of question in a lean. So I'll try and filter that in, but what I'll do is that I'll go back to my planning and see how can we get.
Can you hear me?
Yes, I can hear you. I'm gonna go off just now, and I'm almost finished. So I'll go back to my planning and then try and see to what extent can we then incorporate perhaps an exam question and do it here. Okay, so I think that's about it, guys. You must have a great one, and then we'll meet next time. Okay. Cheers. Bye.